Welcome back, folks. This is the ICT Mentorship Midweek Review for February 10th, 2021. Higher time frame structure to intraday order flow will be the lesson topic. A little bit of housekeeping before we get into the discussion. If you go into the month one content thread for the new members here that are getting ready to transition into month two access, if you click on the month one or new member module 1 of 12 is what it should say in your form, you'll see two threads once you click on this. This is where you usually get your content, your lessons for month one. And then this right here is what you click on when you're ready to pay and continue to the next month or month two. When you click on this link here, what will open up is this post. Now this post basically outlines the payment note that needs to be part of your month two payment. You do not send the same payment note your first month was sent with. This has to be here. Now where it says include your email address, I'm asking you to put your email address in this that was used at the enrollment. Okay, so it's the enrollment agreement email address, and it should be the same thing for PayPal. Throughout the year, we have students that sometimes change their PayPal email address, and it causes a problem for the administrative side of our mentorship. To help alleviate some of that, if you just include your email address that is associated with your enrollment agreement, we never have a problem. We'll have no problem locating your account and adjusting it. Month two's payment is technically not due until March 1st. We allow early access every single month on the 27th of the previous month. Like right now, we're in February. Everyone that paid their first month, you've basically covered the entire month of February. Okay? Anyone that's paid for month two and they have included this payment note down here, you are in idle. It sits until the 27th of February. Now, depending upon how many of you are paying early, it may be the 25th. As I mentioned before we started the new group, I said we may start doing the early startups into next month content for those that paid on the 25th of each month. So don't be surprised if you've already paid and you have access to month two on the 25th. If you have not paid for month two on the 25th, if we decide to use that date, or the 27th, which is what every month typically is early access granted to those who pay early, that's usually when the access is updated. Now, the time of the date on the 27th is noon. So at that time, or after, if you've paid, you should see that update. Now, if you've paid after the 27th, it may take a day or two before your payment is reached in the queue of all the payments that are being received, because there's a lot of you. You don't technically need to pay until the 9th of March. Now, here's really important that you understand this. If you are trying to wait to the last day in March 9th, and then you're going to make your payment, if all of you or a large portion of you do that, we're going to have a problem, because you're all going to be bottlenecking towards the last day where my staff can work the payments and process them. So we've asked if you are able, if you're willing to help us spread the payments out, whatever your first payment was made on, whatever that number is, use that same date going forward every single month. So for instance, if you paid your payment on January 17th, you should be aiming for February 17th. Okay? And if you do that and treat that as your month three payment on March 17th and April 17th, your month four payment, so on. If you keep doing that, that would help us tremendously. But understand that if it's made before the 27th, or like I said, if we go to the 25th to grant early access, because technically you shouldn't be getting any of the content until March 1st for month two content. But we allow a grace period for those individuals that want to pay early if you want to help us by doing that, we allow you to have early access. So it's a little bit more ahead of the curve, if you will, than just waiting for the next few days. Now, is it all that advantageous? No, but a lot of you like to get to the next lessons, and that's cool. But we just need you to help us if it's something you can do. Some of you have no ability to do that. You have to wait till you're paid, and it don't line up with the dates like that. But just understand that there are people that are reaching out to us right now, and they're saying, hey, I paid, I don't have access to month 2. You won't have access to month 2 until February 27th, because technically your first month's payment covered the entire month of February. So when we do the next billing cycle, because now we're between billing cycles right now, no payments are processed between the 10th and the 26th. So on the 27th, my staff will start processing payments again, and they will activate anyone that's already paid, and their month 2 payment will be credited towards month 2 content, and then you should have access. If you have paid, please do not email us and say, I don't have access to month 2, because no one has access to month 2 right now. If you're in a new group that just started, no one has access yet. Okay? We do this every single month, and I said I would walk you through when payments are due, and this is about that time where everybody starts getting nervous. Nobody should be expected to see month 2 content right now. It's not there yet for anyone. They haven't, even if they paid, they don't have it turned on for them until February 27th. It may end up becoming February 25th, and I'll bring up the speed as we get closer to that date. But for everyone to understand what they're supposed to do, this payment note must be there, and you just click on this link, and that opens up PayPal immediately. Okay, you don't copy this link, you click on it. It's a hyperlink in the forum. If you click on it, it'll open up a portal that pays directly to me. And I think that's pretty much it. Just, if you can help us, great, pay early if you can. If you can't, I understand, but just understand also, if you wait to the last few days, it may push you into a delay, because we get a lot of that, and we try to avoid it as much as we can. And this is the only idea I could come up with that helped alleviate that when you guys came in initially. All right, so I got my calendar for Thursday. This is what we have left. Essentially the unemployment claims for the New York session tomorrow. That's what I'm really focused on primarily. And then Friday we have preliminary GDP for cable. All right, dollar index daily chart. So basically we have seen the return into the optimal trade entry. And then we have redelivered rebalance. Trades up into that, sells off, hits an order block here. Now we're trading into Thursday. So Thursday typically by New York session can cap the weekly range. So what could happen? Well, we could have the low already in place with today's trading for the week. Or we could trade a little bit through it and then do no lower low into Friday and just consolidate and trade a little bit into this range here. Or we could roll through and attack the sell side liquidity in here. That's what we're going to be watching. But at the end of this video, I'm going to teach you the higher time frame structure and how that works together with lower time frame order flow. All right, 60-minute dollar index. All right, so you have a 60-minute fair value gap in here that you can find on your own chart. That's your homework in here. Market trades up into that, breaks down, sell side imbalance, buy side inefficiency, closes that in, trades lower, redelivered rebalance, we've already covered that, breaks lower, fair value gap, rebalance, fair value gap, consequent encroachment, fair value gap fills inside of the fair value gap that we were aiming for, breaks one more time, fair value gap closure, and then runs below the sell side liquidity pool I mentioned in the last recording. It eventually trades below this sell side liquidity pool and into the fair value gap that's seen here. So below this low, sell side liquidity, how far can it go? There's an imbalance right there. Trades into that handsomely and has a little bit of a bounce, respecting so far the discount low of this fair value gap there. Overall, what I've outlined here is a market maker sell model. So we have consolidation, breaks the consolidation, comes back, returns to consolidation, accumulation. Runs higher, reaccumulation, runs higher, reaccumulation, runs higher, small little level of reaccumulation. Smart money reversal. Now, why is this a smart money reversal? It's traded several times higher and into a imbalance that closes in perfectly. That's on a 60-minute time frame. You got to go back in your own chart over here, and you'll see these levels here. All right. If you don't see these fair value gap levels, you probably do not have the right dollar index. Just make sure that yours says TVC. Okay, TVC is the dollar index that you want to have. And once we have the smart money reversal, we have a low risk sell redistribution, another level of redistribution, redistribution again, and then one more here, ultimately taking us below the original consolidation, attacking the sell side liquidity with this drop here and right into an imbalance, which is below that low. So this is a market maker sell model that's completely mapped out for you, and you can study this on your own. 15-minute time frame, dollar index. And you can see all the fair value gaps in here. Consequent encroachment, fair value gap here as well. This is an optimal trade entry here as well. And then we break down. Look at the bodies respecting the top end of that premium high of the fair value gap on the daily chart. That's these levels here. And we're just consolidating. Now, it's not important to know going forward if there's any more movement for this week. And I'm going to tell you the reason why in the lesson, but it's important you understand the basic idea when you first come in here. What am I trying to teach you right away? I'm trying to teach you how to work within a range, how to identify a directional bias, how to anticipate reactions and moves that would begin at specific levels, and the logic as to why they should. And I'll address that when we get into the lesson. But for now, just know that the rest of this week, we're not concerned with a direction. We're not concerned with it making a specific run to any particular level, because ultimately the 60-minute market maker model has fulfilled. And we are trading tomorrow at Thursday, when generally, not always, but generally, we have a completion of the weekly range by New York time frame on Thursday. Now, that's a normal process, but it's even further significant if we look at the fact that we have completed a technical delivery with that 60-minute market maker sell model on the dollar index. All right, daily euro dollar. All right, so I'm going to keep it real simple, real clean, and we'll kind of come back to this chart in the lesson. But we had a nice reaction here at the order block. We've outlined that, and we were looking for that when it was up in here. We hit it, and look at the bodies respecting that. Handsome. Runs up, trades into all of this congestion, and this last up close candle trades into that right there. Now, ultimately, if it goes lower from here, I don't care. If it goes higher from here, I don't care. I'm indifferent right now because Thursday doesn't start my trade idea. It's delivered what I expected for this week. Anything beyond what it's already done is just extra. So because I have nothing on as a trade, I don't have any horse in the race now. I don't have any care. I don't have any interest on whether or not it's going to go higher or lower. I'm in observation mode. Okay, I'm trying to take in whether or not we want to go higher or if we want to go lower, because at this point it could go either. So we're at a stalemate for immediate Right now, where's it going to go next? That's what this is basically teaching you tonight. The move happened, as I was outlining. The run on euro higher and lower on dollar materialized. We're going into Thursday, day of the week. And the first major impact with news is 5 a.m. in euro, and then 8:30 in the morning with unemployment claims for the dollar. So it's late London Open and then New York Open. So there's no real news after that. So it's basically indicating that we've seen technically the best in this week so far, and to anticipate further trading or expecting any kind of major move. Is it likely? Probably not. Can it happen? Sure, anything can cause it to happen, but nothing that we can forecast with any great deal of certainty. And as a reminder, we have seen the completion of that dollar market maker sell model. So you're going to see this reoccurring theme when we talk about when markets have kind of like ran their course for the week, and we try not to get too overzealous about taking new positions because it's already fulfilled its technical obligations. Euro dollar 1 hour chart. All right, so we have a buy side liquidity pool here still. We have a sell side imbalance, buy side inefficiency in here, and the premium high and the discount low of the SIBIs here. Extending out in time. You can see he's had some sensitivity in working those levels here, consequent encroachment. Below that, we have the fair value gap, and this is not included in the daily chart, but I talked about it in previous discussions. I'm going to go back to the daily chart real quick. That's this one right here. Okay, so this fair value gap from the low and the high of these two candles respectively, that's what's being shown there. And that's this right here. Now this is a market maker buy model. It's just the mirror image of what we outlined on the hourly chart on the dollar index. Accumulation, reaccumulation, another level of accumulation, and look where it accumulates. What is it accumulating? New long positions. Trading back down into the fair value gap here, and this whole range is derived from the daily chart. The one I just showed you when I went back to the daily chart, that's what's outlined here, okay? So we found some support there. It accumulates more long positions, runs back up into the imbalance here, hits it, sells off a little bit, and then runs higher. And we're looking for the buy side liquidity resting above here. Does it do it this week? Yeah, I don't know. If it doesn't, am I upset? No. Am I forcing the idea that it goes higher? No. Because the day of the week is Thursday tomorrow, and usually the weekly range kind of like runs out of steam. It can create a large range day tomorrow. It's just far less likely to happen. We're going to cover all this price range in here in our price action lesson for this midweek review. 15-minute euro. All right, so we have, again, the sell side imbalance, buy side efficiency, premium high, and discount low here. Works consequent encroachment here, runs a little bit higher. All of this in here has me concerned whether or not we pump up into that in the Euro news or in the New York session. So do we go a little bit higher than that and maybe into this high and then reject tomorrow by making a very shallow run above this high, basically clearing out the buy side liquidity here? That's something I'm considering. We have a rejection block in here, which is traded to here, and the last up close candle here, bearish order block. Small little gap, you'll see that when we get into the 5-minute chart. Sell side liquidity pool rests below these lows here. 5-minute chart on euro dollar. All right, you can see in London Open, again, we're not looking for shorts. We're not looking for sells. We're more interested in catching long positions in this pair. But we have a sell side imbalance, buy side inefficiency in here. The market trades back up into that. Last up close candle, bearish order block. This little run, running out sell side liquidity initially here, just with a shallow run, still pulls more liquidity right below these lows. So we could eventually see it drift below that. And how we trade once we get through there, if at all, will be indicative of what we get on Friday's trading. Small little fair value gap, as I mentioned, on the 15-minute time frame, we would see on the 5. That's what this is. Bullish order block, and then sends it back up into the bearish order block, rebalancing sell side imbalance, buy side inefficiency. And then consolidates. See how it's doing this here? And then rolls into some distribution towards the end of the day, around 2 o'clock. So basically, it's a consolidation day. And again, we're not trying to forecast the next big run on Thursday and Friday. We're just spectating and seeing what we can find in the study of the action. British pound versus US dollar daily chart. All right, so we had buy side liquidity here. We ran through that pretty convincingly. And go back to the discussion back here where I said we would probably see a large range day, not likely to close. Doesn't have to close on like a down day. But we'll see a big range, and once it goes down there, it could pick up orders and send it higher. This is the type of price move that I had in mind by describing that scenario. The whole premise was try to avoid short selling cable because it's constantly burying bears. Like it's hanging their head on pikes. And that's something that I got caught up in my trading as an early developing student, where I just kept trying to impose my own will, saying, okay, it's finally done it now. It's finally done it. It's finally done it. So it's hard to trade this pair bearishly. And when you're bullish, it still has opportunity, but I just don't trust it. One hour British pound. Okay. You'll find that we have order blocks in here. Buy side liquidity hits that. Nothing in here has me excited about any of the market structure whatsoever. I'm not convinced that we've made the actual high. It could potentially go a little bit higher. Does it need to do it the rest of this week? No. But I would venture to say the first half of next week, unless we get some complete washout and it goes lower, Thursday and Friday. I don't think that anything here is bearish yet. 15-minute time frame on the British pound. All right, you can see the bullish order block it trades into here, and then it runs into another, which you'll see when we get into the lower time frame. And we also have redelivered rebalance. Now we have it on the downside. We have a candle here. It runs up, runs back down, completely overlaps this entire run here. So it's immediately rebalancing here. And then you focus on this candle's low and this candle's high. Extend that out in time. So ignore this and just focus on the next candle here and the one prior. And extend that out in time. That's your range. This low has sell side liquidity. It's gone below it a little shallow so far. And to me, if we go through this, I like the idea of getting into this order block a little bit deeper, maybe mean threshold, and clear out this. So if we get some kind of wild reaction on the unemployment claims for tomorrow, that might be a catalyst for something to watch there as well. But all in all, I'm just hands off on cable. 5-minute chart on British pound. Okay, London open. Optimal trade entry here. Small little imbalance order block. These two consecutive down close candles are the order block. Lowest most down close candle and any previous down close candles that are consecutive. That makes the entire order block. Trades into it here, into the imbalance. You can see that on the higher time frame, 15-minute. Trades into that. Runs. 2 down closed candles. Trades in that order block. Reclaimed order block. Here. Small little optimal trade entry in New York. Sends it to the buy side liquidity resting above here. Sweeps it. One more time. Breaks lower. Bearish order block. Old high. Here. Breaks and goes into consolidation and finally trades a little bit lower after 2 o'clock New York time. The high of the day just falls short of the London close time period. So again, you're seeing right now the way the market is just a little off in terms of its symmetry. So in ideal scenarios, you can see that there's key turning points occurring at the times I tell you the algorithm will operate. The logic behind these moves is, again, focusing primarily on the underlying premise of whether or not the market's bullish or bearish on the higher time frame. And that draw on liquidity on that higher time frame daily chart, you work with that narrative intraday. And when you do that, and that's what doing these daily log entries and midweek and weekend reviews is trying to instill in you, the perception of reading price by repetition over and over and over again, seeing the same things, repeating over and drawing attention to them. That's what you're focusing on here. You're not trying to learn why order blocks touch the wick or the bodies right now. You're not trying to figure out every facet and nuance that goes along with redelivered rebounds already. I'm not going to answer your emails about that topic yet because I just introduced it. So you have to wait for more discussions on it. We'll talk more about it, but don't try to demand knowing everything about something just because I brought it up in a video and it's the first time I brought it up. We have to wait for more things to be discussed over the next week or so, and you'll see more details that help me provide the answers that you have and your questions that have been brought up in your mind watching me discuss redelivered rebalance. All right, price action lesson. We are looking at the euro dollar daily chart again. All right, so I want you to think about what we've discussed over the last couple weeks and how the market was likely to come back down into this fair value gap. And if it overshot the fair value gap, this order block would likely create a reaction in price. This type of reaction is all that we're looking for. Now, prior to this drop down, we had no idea what the market was going to paint and provide for us in terms of a PD array. Now, if we're forecasting a move to this fair value gap and potentially into the order block, that's down here. If at that moment when the market creates this return to this area, you have to look at what the range is prior to that low forming at the order block. And what do I mean? That's this range here, this high to this low. So this is the art of forecasting. You want to be able to imagine when price was up here. And now I understand what I'm saying here is hindsight, but I'm also talking about something I forecasted in the charts, showed you where it was going to go, pointed to it, and explained to you how it would get there. And we're here. We did it. Okay. When you're looking at moves that you think are going to unfold in price, you have to consider what it would likely be like once it gets to the area that would potentially bring a intermediate term price swing. So on a daily chart, a move like this is an intermediate term price swing. It's not a short term little move like this. This is an intermediate term price swing. This is an intermediate term price swing. This is a short term price swing. This to here and here is an intermediate term price swing. They're not the short little one-day events. It's several days, and it's the easier to notice price swings when you look at a time frame. Like this is a short-term little price swing here, whereas from here to here is intermediate term. So it's all market structure. So once we get to this low, we would have to look back and see what the range is. Okay, so from this high down to this low, where would be a premium level exist? Well, it has to be above the midpoint. So above the midpoint, what do we have? We have a small little fair value gap. We have the last up close candle bearish order block, and then we have the rejection block, old high. So that's what I would be looking for premium arrays. The things I would look for as a target from this low, if it's going to bounce, how high should it reach for? Well, I want to see this close and how it trades into this last up close candle. That's what I'm interested in here. Okay, so if you have that in mind, it will allow you to frame out your week. So while it could potentially eventually trade up into this level here, we're not expecting that to happen in the same week. Okay, from this order block, the market reaches up into the last up close candle before this drop down. That's your bearish order block. So now we have a framework. If you were waiting for a trade and you wanted to be a buyer down here, because if that's your model, that's what you trusted, you expect this type of price move, and then you want to incorporate lower time frames. What does it look like on the lower time frames? What are you expecting to see? That's what we're going to cover. But it's important to understand how we're framing the setup and how we're framing the weekly range. The order block is what we were aiming for on the drop down if we went through the fair value gap. We went down through it. Once we hit it, we anticipate a rally, something that can cause a bounce. If it's going to bounce, we would expect it to get up into this fair value gap, but if it goes through it, this could be a level as well that it could reach into. Now, using a 10-minute chart, why 10 minutes? Because I want you to see the small little fluctuations each day. And now I'm ringing in the 2 o'clock hour in London Open. So if you have the opening price at 2 o'clock in the morning, New York time, that price level, as you'll learn later in the mentorship, is a specific threshold that I like to use to set up London Open kill zone setups. This blue line down here, that's the daily bullish order block. Okay, it trades down into it, and then once it trades into it, we're not doing anything yet. We have to wait. What are we waiting for? We're waiting for the market to indicate that the algorithm is now trying to go higher. What does it look like? What does that look like? This right here. This is displacement. So when the Bank of Germany runs away like this and creates this little imbalance, this first drop down in consequent encroachment or institutional order flow entry drill, either one, you're going to be a buyer in there. Your stop would be below here. It's below a short-term low, and it's also below the order block, and it's after the displacement. So it's signaling, it's indicating to smart money that this is where you want to be buying. Wait for the retracement because you don't want to chase price. You want to buy it at a discount. Runs higher and then consolidates in the next day. 2 o'clock in the morning, again, we want to be seeing price drop below the opening price at 2 a.m. When it does that, it will accumulate long positions. Then the algorithm will run higher, creating a displacement again, rebalance, and still move higher. The next day, same thing, 2 o'clock in the morning, you want to be a buyer at or below that opening price for London setups. You're buying the low of the day again, price rallies again, retracement, rallies again, consolidates, and then finally runs into the bearish order block. That's the daily. So between this area here and here, that is your framework. That's how you map out the range that you're trying to trade in. And you're using the time elements in concert with the idea that this market should trade higher. We called euro higher. We called dollar lower. So we have those things behind us for supporting this framework. But it goes one step further. If we look at the individual days, this was Friday's trading. Are we trying to trade on Friday? No. But we can refer back to Friday and say, okay, we had this indication here. Now we're trading here. Where's our target? Well, we're looking for it to trade back up to that bearish order block because that's a premium level. And we have range from here to there. So what are we doing here? We're range finding. We can see that we're essentially around that 2020 level. And up here is essentially 21.20. So we have a 100 pip range. What if your objective for the week is 50 pips? Can you find that in there? You should be able to. But what happens if you can't? Take what you can. At 2 o'clock in the morning on Monday, if we're bullish, aren't we expecting the market to be bullish on Monday, Tuesday, into Wednesday? Yes. Aren't we expecting it to be bullish in London Open? Yes. Why? Because most of the time, in bullish environments, the low of the day is going to form in the London Open kill zone. Not all the time. If it trades lower in New York than it traded in London Open, any one of these particular days, my protocol is it's probably a stop run and a New York market reversal profile will most likely unfold. Otherwise, I'm trading with London Open as the low of the day in this scenario. Using 2 o'clock in the morning as your threshold, this is the filter. You want to be buying below it or at it to be in a very deep discount for the intraday range. Study what's happening here. Okay, it's moving below that opening price at 2 o'clock. You have been seeing me include the midnight opening price. That's still important, but specifically, I like to use the 2 o'clock in the morning opening price for London Open. And the directional bias is what we've been outlining. And here's an objective which you would reach for. It goes one step further. If you take the range between that order block and the order block on the high end, so we have the bearish order block as our terminus. That's our objective. It's trying to reach up there from down here. This is our dealing range. Okay. You know what these levels are because it's already created it in the daily chart. So if you take a Fibonacci, lay it on this order block and drag it up to this order block, you'll get the 50 level right here. Then you want to take another fib, lay it on this level up to the high of the bearish order block, and then you'll get a 50 level laying right here. Then you're going to go back to this order block level and draw it up to the 50% level that you determined when you drew from here to here. And that'll give you this 50%. And by doing this, you actually graded the price swing. This is 25, 50, 75, terminus. What's the importance of all that? Well, this is a known range that you anticipate trading. This to this. This is not quarters theory. Okay. So many people have seen leaked videos and say, oh, he's just teaching quarters theory. I want you this weekend to do a study on quarters theory. And you'll see that this is not quarters theory. This is advanced algorithmic theory. Because what you're doing is you're forecasting a dealing range that has not yet happened. You're using a discount level to a premium level that is static. It's already on your daily chart. So by using that, you can anticipate buying opportunities to form around time. What time? Below this price in London and around this 50 level. So it's forming around this here. And we have this next buy here around the 75% of the grade of this level to here. It drops down. Another opportunity to buy occurs right in this area. And there you go. And this is grading price swings. Okay, you learn this in the mentorship. But I want you to focus on how the market delivered on Monday and Tuesday and Wednesday. Now we're consolidated. Why is it consolidating? Because it hit an array that's a premium level, and it's been straight from Friday all the way up to Wednesday. Now, there are certain courses out there that'll say the market doesn't go up 3 days in a row and keep going up. That's what happens when you don't have all the information. This is what you get when you understand everything. And I called these things for you by saying the bullish order block on the daily for euro is likely to create a buying opportunity. We're going to see lower prices in the dollar index. And when this traded above and into the bearish order block on euro, it also was trading into its deep discount levels on the dollar index. So both were happening at the same time. And now, Wednesday, we're done. Like, we're not in the business of trying to push it from here. Can it go higher? Sure. If it goes lower, are we upset? No. It's offered us the framework to find profitability. This is how you go from not knowing anything to taking portions of what you learn from the mentorship and using the logic that I'm showing you in these commentaries and blending it together. Okay. And over time, you're going to see these things, how it's just like clockwork. Now, grading price swings is not something that is going to be super precise where everything is going to touch this level and go, touch this level and go. This is a general area. Okay. Just a general area where the price is going to be in close proximity to that when it creates the next move. The time element, which is the first criteria, it's time and price. What time? Well, we have Monday in a bullish environment for euro, bearish for dollar. So we're looking for the low of the day to form in London Open on Monday and Tuesday. And if it doesn't show it on Monday or Tuesday, it's likely to happen on Wednesday. But we've had a really slow economic calendar for this week. So I mentioned that they should have no problem trading lower on the dollar index. Go back and listen, because they're all the things I talked about. And we had a real nice slide on the dollar index. Well, that's going to allow for real easy upside movement on euro. And then when you blend these things, time and price, you can see the lows of the day forming. And they're trading back into levels that I've already outlined, and go back over to your individual daily log entries on the 5-minute charts and fill in all the details. Not being shown here because it would be too much information for this chart, but the underlying premise to this weekly range is being shown to you here. The details of the individual days are being given to you in the daily log entries. Everything is here. Everything was pointed to before it happened. And now you're seeing all of these components come together. And this is how you take the higher time frame structure and move to a lower time frame and work within the order flow. So I will touch base with you again tomorrow on our daily log entry, and I'll go over to TradingView also and show you how you can set up your charts so you can save things and be organized. Until then, be safe.